A tremendous pleasure to be speaking with you today.
Now back to the Dan Gemus Real Estate Show on AM800.
All right, the hour is just flying by, 12:35 here on AM800. And Heather Maritet in studio with me, sales rep with the Dan Gemus team. We're having lots of fun, Heather, today.
Oh, yes.
Now it's time to talk mortgages. A good friend of ours, Joe Bondy from the Super Mortgage team on the phone. Hey, Joe, how are you?
Hi, guys. How's everything today?
Oh, a little wet, but otherwise a little wet and muggy. But could be worse. Could be snowing, right? So listen, there's so much happening in the world of mortgages right now. I feel like it's been the talk of the town and of everything for the last little bit. But obviously, everyone is aware of the rate reduction over the last few weeks. It's got people questioning what to do, whether they should go with a fixed rate or a variable rates. What's the plan right now, Joe? What are you recommending to those out there listening?
Well, yes, we did have a decrease in June, but the July 24th rate announcement, we're not sure if there's going to be another decrease because the inflation numbers came in slightly higher. They went up, actually.
Yeah.
So they might hold in July. I hope they don't. I hope they actually do decrease. But there's a couple of schools of thought on the variable versus fixed conversation. Right now, we're in this anomaly where the fixed rates are a better deal than variable rates. That in a 30-year period, that's happened like 3 times, and this is the 4th.
Interesting. And so the fixed rates are sitting about where now, Joe? So I guess where were they at the peak? How high did they go up? And where can you find them today?
Well, today we're sitting at about a 4.89 5-year fixed rate.
That's not horrible.
No.
No, like historically, people would be, throwing their arms around you if you gave them that rate. Just the last couple of years, we had another anomaly where we had these very low fixed rates.
Yes.
And people have, started to believe that was the norm.
Joe, people have very short memories. They have very short memories, right? They think, "Oh my goodness, this is the new reality. 1% or 1.5."
We were spoiled for too long.
We were spoiled. That's just it, right?
Absolutely. Like right now, your best variable would be something like prime -1. Prime being 6.95 today. So your best variable today would be 5.95.
Yeah.
So there's a couple of strategies. If you want to go with the variable, I would say if you're buying a new home or you're up for renewal, maybe do that, because as the rates come down, your payment remains constant.
Sure. And
then more of that payment goes towards principal. So it's like you're prepaying your mortgage without having to do anything.
Okay.
But
yeah.
to the flip side, you could lock yourself into a guaranteed rate that's, a percent and a bit lower, but set your payments up as if you took that variable rate and be immediately beating down that principal over the next so many years.
Now, could a strategy be maybe just locking in for a shorter term? Because traditionally people do 5 years, but maybe 1 to 3 year. What would you think about that?
Yeah, 3-year has some good rates. 2 years has some good rates. I mean, you can probably find a 3-year somewhere around 4.99 to 5.09.
Okay.
The 2-year, as of today, the best rate out there is 5.29. So you could play that game again, but set your payments up as if you took that variable. And then as the rates do come down, if you took that shorter term, you might be able to lock in. Now, I don't think the fixed rates are going to come down to that 2% level again, but you might be able to save yourself 1/4 to 0.5%.
It's like everyone out there just waiting for house prices to come back to $170,000 for a raised ranch. It's not happening. It's not happening. I know. It's
when I started the raised ranch, fully finished with about $280.
Seriously, I know. Mm-hmm. I know it's come down. Yeah, over the last we always joke that 10 years ago the average price in Windsor Essex was about $170,000. So it's a different world obviously today. Okay, so I guess ultimately it comes down to scenario. It's individual for everyone, isn't it?
Yeah, I mean, if anybody's in a variable and they still have, say, 2 or 3 years left on their mortgage, maybe lock that into a 3-year, maybe flip it to a fixed.
Sure.
So you're not paying that premium while you're waiting for rates to come down. Are rates going to come down? I would say yes, but we just don't know when is the problem. And you're paying a premium while you're waiting and waiting and waiting, right?
Now, the Super Mortgage team is a broker, a mortgage broker. You guys have the opportunity to shop your clients around. There's some benefits to that, isn't there?
Oh, 100%. We have over 38 lenders at our disposal. And, every Monday morning, the inbox is flooded with everybody's new rates and what's come out and what's the best rate out there. And, I've seen as low as 4.69 with a certain lender. I mean, you got to qualify for these rates. But, the rates are coming down, so that is a good news story. But they're not coming down tremendously. If you get 0.1 off, it doesn't save you a ton of money, maybe $5 to $10 per payment.
Now, Joe, when you're working with the client and trying to figure out which lender to put them with, what is the determining factor? It's not always the rate is the best way to go, right? I'm assuming they all have different terms that would benefit a client for one reason or another.
Yeah, they all have different terms and different product types or product blends. So say you were coming into a big bonus at work or big bag of money, maybe we would set you up with part mortgage, part line of credit, so that when that big bag of money comes in, you could pay that off right away with no penalty, and you still have your prepayment privileges on the mortgage side of things. So just one strategy that we use in order to help people pay off their mortgage and save the most money on interest. Having 38 lenders at our disposal versus a bank that has one at their disposal. They only have one set of rules, one set of lenders, one strategy for you.
Sure.
We have, 38 lenders times 10 strategies each.
Oh my!
So.
Yeah, you can't beat that. Most definitely. So let's put your crystal ball in play here. What are you seeing happening over the next maybe let's go 12 months? What do you foresee coming up?
In 12 months, I believe the prime rate comes down about 0.75%.
Okay.
And the fixed rate might come down another 0.25% to 0.3%.
So that's not a huge difference there.
Not a tremendous difference,
right.
But I mean,
like
every little bit helps.
Yeah, like we've been trying to tell folks, we're seeing more listings on the market now, and if someone is in the market, you're not going to. It won't make sense to wait to save, a tiny bit on an interest rate when as the market heats up, the prices are going to start going up again. You're better off jumping on something while the market is a little bit quieter, and essentially the rates aren't. Again, they're not going to be affected that much.
I would agree with that 100%, Dan, because it's like the scales of justice. As one goes up, the other goes down, and vice versa. Your payment's going to remain the same.
Yes.
You're going to pay $2,000 a month, whether you get a lower rate and the house price is higher, or you get a lower house price and the rate is higher.
Yeah.
You're still paying your $2,000 a month.
Great way of putting
I would rather have less to pay off,
yes,
meaning the lower house price. So now's the time to jump into the market. I would agree with you 100%.
What a great way of putting it there. That's fantastic, Joe. Anything else you want to say before we let you go? Obviously, it's a busy time right now in real estate. We're seeing more listings, which is great news for those who are looking to make a move. But obviously, they want to reach out and get pre-qualified before they get too far, don't they?
100%. Everybody should be pre-approved, know what you can afford, and stay in touch with your mortgage agent along the way, because as rates change, so does your buying power. So you might be able to get that extra 10, 20 grand you need to get that dream home just because the rates went down. And if you stay in touch, once a month, every 3 to 4 weeks, we can run the numbers. It doesn't take long, and make sure that you're getting the maximum benefit.
Fantastic. Listen, Joe, what's the best way to reach out to the team if anyone has questions?
Anybody can call us at the Super Mortgage team from Dominion Lending Centers National at 519-966-2124, or you can go to our website, www.supermortgageteam.ca.
Fantastic. Joe Bondy, we love having you on. Thank you so much for your help today, and enjoy this long weekend.
Thank you so much. Hopefully the sun comes out.
Agreed. That's Joe Bondy with the Super Mortgage Team. And obviously our regular guest is Ron Bondy. And yes, they are brothers. It's there's relation, but a couple of great guys and a fantastic team. So we love having them as part of our team as well. So, okay, we're going to take a break. We're going to come back. Heather, we're going to give away the gift card for the Richmond Popcorn Company. Now, Heather, you get to pick the caller number. So caller number...
8.
Oh, caller number 8 wins the gift card today for the Richmond Popcorn Company. You want to call 519-792-2559, 519-792-CKLW, and you will walk away with a gift card for the Richmond Popcorn Company. You can find all the flavors on their website at richmondpopcorn.com. We're going to come back, Heather, and I'm going to tell you about whether or not plants have feelings.
I've been waiting all show for this.
Oh, lots more to come right here on the Dan Gemus Real Estate Show.